All right, and I think we're live. It appears so. Let's see if YouTube's doing the same. Yep. Thank you for being here. Thank you to those watching this back. If you're wondering, well, why are you streaming so early? I got somewhere that I got to be tonight. Just things going on. My schedule's crazy. I'm in a completely different spot right now, but I'm just trying to be consistent, so I had to get a quick stream in. And I just figured just share my latest thoughts. So I'll just kind of jump right into it. So go ahead and send an email, or sorry, not an email. Oh my God, it's still in work mode. Go ahead and share the stream to Twitter real quick. Over to Yahoo Finance. Let's check the volume today. Crazy how fast time moves. It's actually insane sometimes. Yeah, so Disney missed on subscribers, but their earnings beat just upon a glance. So I was trying to keep an eye on the market as a whole, because I just feel like it's good to be informed as a whole. All right, so I got it tweeted out. So let's go ahead and take a look. Oh, let's see. Playboy earnings came out. Of course, everyone's talking about that, considering GME DD's new situation or new stock, or their Playboy DD. I don't really know. I'm not following the whole thing, but according to this tweet here, Playboy Q2 net revenue 35.1 million versus an estimated 48.9 million. Playboy Q2 net loss of 133.9 million. Estimated net loss of 11.1 million. Damn. Playboy is only worth 120 million, by the way. That's crazy. Yeah, of course everybody's talking about, GME but whatever. I don't know. It's just the first thing I'm seeing here, so I figured I'd touch on it. But really what I've been trying to calculate out, or like what I'm starting to look at here in terms of GameStop, like with the upcoming earnings, obviously I'm always curious about DRS count, top line revenue, bottom line revenue. What is SG&A looking like? What do cost of goods look like? Obviously, we want to see them continue to cut costs. So specifically SG&A, I'm really looking for a solid improvement. And then also, I really feel like stock-based compensation will be a little bit lower, but I was doing the math on it. I don't think it's going to be dramatically affected. So I don't have it on the screen, but I have it here. So it's full year 2022. They spent $40.1 million on stock-based compensation, and it was pretty evenly spread out, about approximately 11.1 for Q1, 7.8 for Q2, and then 13.3 million for Q3, and then 7.9 million. And then for Q1 of 2023, the only quarter reported for 2023 thus far, you have 7.9 million. So I'm expecting Q2 to be maybe like 5 or 6, considering Furlong and DJ have left. So with that being the case, I would imagine there are some other executives that may not be with the company anymore. And it seems like they're really just trying to build the most efficient team possible. And Ryan Cohen talks a lot about hard work. And I think really his idea is that he wants the hardest working people to create just a small but yet effective team. And that seems like the route they're kind of going. And I know there's been some talk of like, oh, well, they're done with Telos. Like, it's over. Web3's over. And I was just catching up on a little bit of Morant's rants, and I saw one of his videos, and he brought up a great point. He's like, all these other countries are getting involved in Web3, and especially Asia is getting involved in Web3, and gaming is huge there, and play to earn is something they've already kind of toyed with, I've kind of heard about, but that's not even the main point of Web3, in my opinion. It's truly about owning your assets, owning your items in game, and then being able to transact amongst people. So maybe it's more now shifting to be based upon the blockchain technology, but it's not a situation where you're translating the assets back for US dollars very simply. I think there's always going to be third-party sites or ways to do that, even with just Steam. When you think about that, there's been ways for a while now to be able to sell your like skins for CS:GO or whatever it may be for actual cash if you use like a third-party site. So I think it'll be a little bit more transparent with blockchain. It's more possible for that to happen, but I think the main focus is the in-game items. And if you do have an item you want to exchange, you're exchanging it for another item or the capability to play another game, or maybe an item in a different game. So that's kind of where my head's at right now. And Morantz also brought up a good point in the video I was watching, that elixirs seems to be the foundation of GameStop Player. So I don't think that's just completely scrapped. I know there's some like murmurs about that. But just like anything else, I feel like you have to just give things time, let things digest, and then really see the big picture. And, in hindsight, this might be a great buying opportunity. Also, in hindsight, this might be like, okay, well, this was just the start of the dip. Nobody ever truly knows, right? And that's why I think it's important to have a long term basis when you're investing. Whereas if you're trading, it's a different situation. You pick your time frame, you figure out where you want to get in, you want to get out, what your goals are, what you're looking at, whatever it is, right? Whereas investing, you're looking on a long term basis. And anytime there's a price that you deem undervalued, you have a chance to acquire shares. And that to me, that's what investing is versus trading. But we'll see, right? We'll see how exactly it plays out. And I don't give financial advice, of course. I'm only sharing my personal thoughts and opinions. Always have been, always will be. I'm never trying to say invest in this, invest in that. I'm just here to present the stock, present information about it, and just do coverage on it, right? And then some people say, "Oh, well, you're giving financial advice." I'm like, "Okay, so what is CNBC doing when they just talk about stocks? Are they constantly giving financial advice?" And then people are like, this one guy on Twitter right now, I must be living in his head rent free. Or a couple of them, they keep just tagging me, which I'm like, thank you. You must obviously be returning to my social media pages, so you're boosting my engagement. So thank you to those out there that are hating. I still appreciate you. But it's just funny because it's like someone's like, oh, what do you makes you think you could give financial advice? Number one, I'm not even giving financial advice. And number two, what makes you think you should just blindly listen to me? I don't even know you. You don't even know me. I'm not ever saying you. Why would you just blindly listen to me? You're silly if you're just blindly listening to anybody. That's foolish, in my opinion. So when they say, well, what gives you the right to say that? It's like, one, I don't give financial advice. And two, then just don't listen to me. It's that simple. So it is what it is, right? I mean, I feel like if you're gaining haters, you must be doing something right. So I feel like I must be doing something right, right? I mean, let me hit the chat. Jackson's, what up? First to like. Good evening, all. Good to see you, Jackson's. Happy to see you. Freshmaker as well. Hello, folks. Need some GME encouragement. Hard to watch the stock go down each day. I know what you mean, Jackson's, but I feel like it's all a psychological game, and at the same time, like I was saying before, it's all about the long-term basis. GME in a nice discount, daily RSI at just 30.79. Remember Ryan Cole and others bought at 22.80. GME is nearly oversold. You want to buy at this point. Hey, no financial advice, right, Freshmaker? But yeah, exactly. It's in perspective when you look at times when insiders have bought. We're below the price point that's happened. And honestly, the more I think about it, it just makes sense more and more for them to not buy back stock right away. I kind of like toyed with the idea or thought, well, maybe now's about the time, right? And maybe it is almost time. I don't know anything for certain, right? But I look at it as like, if I'm management and I see the big picture and where the company's trying to go long term, or where they're trying to take the company long term, I start to think, well, if people are going to keep betting against the company, the stock price is going to continue to be driven down for whatever the reason may be. Then, okay, if I'm in the company and I'm a board member and I want to acquire shares, okay, fine, let them keep knocking it down. I'll be able to acquire shares. And then you see lots of other individuals that like the stock on a long-term basis. And they also then have the ability to acquire shares at a lower price. And you see that they just keep buying, right? I mean, there's always people that could sell, right? And we never truly know. But as far as I can tell, it just seems like there's so many people that are interested in the long term of GameStop and that are adding on a consistent basis. And they're adding more as it goes lower. So, with all that being the case, why would you rush to buy back stock, especially as shares are being directly registered? So, as more and more shares are being directly registered, more shares are acquired by insiders. And if the price is going down, then when they go to buy back stock, it can have an even greater effect. And on top of it, they can buy back more for a lower price because the price has been knocked down so much. So I just think we just like let them knock the price down as much as they want. Let whatever's going to happen in the short term. If there's going to be a great buying opportunity, I'm just always going to take it when I have capital to deploy. But also, I'm not saying, oh, just go all in on GameStop because, again, I don't give financial advice. But if that's what you want to do, do it. If that's not what you want to do, don't do it. It's actually that simple. It's crazy. But what I do think everybody needs to do, and I will give you this advice, I don't care. Acquire assets. Understand what's happening with the US dollar right now and interest rates and the economy as a whole and why it's so important to own assets. I've been telling everybody around me that. I say, obviously I'm very interested in GameStop, but you really should acquire assets that you believe in, whether it's real estate, Bitcoin, gold, other individual stocks, S&P 500 market as a whole, anything like that. But I think when you look at what's happening with the dollar, I feel like personally, in 5 years from now, the average person is going to understand that the following year, their savings account is going to have less buying power than it did the previous year. And when that starts to become a pattern, the average person notices. And then I think the average person starts to get into more assets. And that's how Bitcoin has more potential. At the same time, you have the Bitcoin halving coming up. So that's just the case for Bitcoin. But I think in general, it's the case for assets because when you start to realize, well, I had this same $1,000 in my savings account last year, and I could have bought a certain computer, but now that computer costs 1,200. Like, what the heck? All the parts went up in price, or whatever it may be. You start to realize, like, okay, it's just inflation is the norm, and I think that is kind of what's coming because I don't think it's a situation where the dollar is just magically going to disappear or just be kicked off by BRICS because at the end of the day, the dollar is still the biggest name of currency. And even if BRICS was backed by gold and various other things, there's always the possibility of, I mean, we don't know, right? I guess I have to read more about BRICS. I don't want to comment on it too much because I don't truly know. But I feel like it's not just like, oh, yeah, well, here's this new currency. It's all better. Like, it's not that simple. And then I also don't think Bitcoin becomes like a common transactable day to day. You're buying stuff. Yeah, there's possible with, I guess, with the Lightning Network, but I look at it more as an alternative asset class where there's a finite supply, and especially with like a what's called halving coming up. But see, Tetron checking in from Ibiza, buy GME and huddle for the long haul. Hey, Scott, I hope you're enjoying Ibiza. That sounds really nice, but that's the way I do it, man. I mean, that's where my head's at. That's for sure. No, you can switch it to all chat. You missed Austin's chat. Oh, thank you, thank you. Good looks. Yo, Freshmaker, literally the #1 goat, for real. You're always clutching it. Sorry, I don't know why Austin's got marked as spam, I guess. If you sold today, you're an idiot. I would agree, Austin. I don't think it's worth it. But, of course, everyone can always do what they want to do. Your last stream is on the GME subreddit, Tetron. Oh, thank you. Another thing. That's awesome. I was thinking like it got a little bit more views than usual afterwards. That's pretty cool, actually. I didn't even realize that. And thank you for being here. Another thing. I think Elixir and GameStop will use Immutable X's passport wallet. Let's see. Look into that. And then I just realized you said GME. Instant wallet onboarding. Let's see. This is crazy. I mean, this is just sad. I mean, it's so weird. Such a weird world. But sad. But who was that person? Like, how do they just grow? Like, oh, what am I doing? GME. Wasn't Apex clearing at Maxime U.S. congressional hearing? Apex emailed hundreds of its brokers to freeze buying on GME to tank it because it was undercapitalized. Webull, Allies, SoFi, Tasteworks, Public.com, eToro, M1. The SEC and DTC had a meeting with Apex Clearing on January 28, 2021. Who was SEC chair during the buy freeze? Elad Roisman and then Allison Hearn-Lee. Interesting. Let's see. And Freshmaker, just saw the retweet. Much appreciated. Instant wallet onboarding. Immutable Passport is a non-custodial wallet and authentication solution that streamlines user onboarding through passwordless sign-in and automated wallet creation, protect and grow your community through battle-tested security, frictionless gameplay, and access a passionate audience of gamers. Let's see. But yeah, I mean, good looks, Freshmaker. This sounds like, to me, just reading that initial little paragraph, what I see is Web3 capability, but kind of like Talos was saying, where it's like Web3 capability, but Web2 functionality, so to speak. Or Web2, like it just looks like how you would imagine it without Web3 being involved, but it's actually just on the blockchain, or it's being done with Web3 aspects behind the scenes, so to speak. Damn, my computer don't want to load. Couldn't find any results. Damn. Yeah, I'll have to look for it later. All good, no worries. But yeah, I did get more views in the last live stream, and I was like, oh damn, I must be doing something right. So, like I said, I'm just keep moving forward, keep going. I posted a random short before, so I'm trying to get into the shorts game too. I feel like there's a lot. Immutable Hub empowers you to launch and manage your products in one easy place. Mission control, launch and manage integrations with ease, speed learning, manage gamer authentication. Let's see. If it's anything like I have to make something, I don't know I can do it right now, but let's see. Developer Hub is partnered with Immutable Passport to keep your coins and collectibles safe in a secure wallet. Secure, keep all your assets safe, put all your coins and collectibles to work. Ultimate access, join millions in a universe of games. Oh, very interesting. And then you just sign in with Google or email or Apple. I mean, that makes sense the way everything's going. I'm not going to do it right this moment, but that's very interesting because the more I think about it, with everything GameStop's doing, I don't think they're just gonna say, okay, forget the wallet, and then whatever. We're gonna make it just bring whatever wallet, do whatever to use what we're making. It's just about using what we're making. I think they're still gonna streamline it, make it easy for individuals to get involved with it, because I feel like that's the only way it makes sense. And then they said, okay, well, maybe they saw this or another avenue they're gonna go down where it's like, hey, we can still make that happen without actually having a direct wallet where we might have to deal with some BS from the SEC because of everything going on. It's not ready yet, but it will be the easiest way to get in the world of Web3. Makes sense, freshman year. Yeah, I mean, I'll definitely look into it a little bit more. I feel like I'd heard of it, but I didn't like remember about it until you brought it up again. Just definitely keep that on my radar here. And yeah, I want to definitely math out soon how. Oh, I can get my Evernote open. How exactly um, the departures of some executives are gonna affect costs? I mean, I don't think it's gonna be super significant or just anything like wow, it's never been like this before, right? But I think it'll be assisting in lowering costs, and then as well as a lot of shares are now not going to be vested, and I'm trying to fully figure out where exactly it gets at what point in time it's getting recognized when shares get vested. Because if it was a situation where, for example, Diana Sahed, I can't say her last name, so I just call her what Moretz calls her now, DJ. So if DJ's shares, right, were all like the amount it's being, so it's being vested. It's easier when I pull it up here. Let's get it. So see her shares. I was editing this a little bit. She was being granted $1 million worth of stock at an approximate valuation of $35. That's a rough estimate. It's the average stock price for the 30 trading days after the close of the market, July 1st, 2022. So roughly, it was about 28.5 thousand shares, and it's about a million, and it's $1 million divided up. So I use that 35 number as a rough estimate. So what I'm showing you is most of her shares never even vested. So either these are something they paid, this is an expense they paid for up front, and now they're going to be able to get it back, or in the reporting, we'll see it being reversed, so to speak. Or, which I think is the more likely scenario, and this is where I have to like look through the details, look through the actual report. I think it's most likely the scenario that it was vesting over time, but now just in future earnings, like obviously we're not going to see these shares vest because she's no longer with the company, so she's forfeited these shares. And then it's kind of the same for Nir Vinny Patel. His shares are vesting increasingly the longer he stays with the company. He's incentivized to stay to 2027 if he wants to get the full vesting of his shares, and he has significantly more shares that are going to vest. He also has a huge sign-on bonus. By the way, she's also missing out on some of her sign-on bonus because, again, she didn't fully meet the obligations by deciding to resign. And then also another less 200,000 they're going to spend a year on her annually. It still counts for something. And then you have to also wonder what other executives are potentially resigning within that we're maybe not seeing very publicly, or maybe it's only seen more so on LinkedIn, where you see they were just working at GameStop and now they're no longer. But also, having said all this, I want to try and find some more offer letters and expand this a little bit, especially because now it's just Vinny Patel or near Vinny Patel on this page that has his information. DJ's gone, so for this point in time, we'll leave her information on there, but eventually we'll move away from it. So here's the GameStop notebook. Let's go back. Let's see. It's 28 down on the GME subreddit. Hey, good looks. Another thing. Appreciate. Yeah, I'll just scroll through a little bit because also, yeah, like I don't even have too much to talk about today, but I just I had to talk about it a little bit, right? I have to at least try and be consistent. So we out here, and yeah, I got to do just a couple shares tomorrow that are in my Fidelity. Me with front seats watching banks f up and a soft landing. Oh yeah, what was it like? Fitch, I think or Finch, just downgraded like 10 U.S. banks today's credit rating, and it's pretty comical that Janet Yellen was like, I think I was saying this last stream, was like, I don't understand why they would cut the credit rating of the U.S. It's like, I do. If nobody's buying treasuries, you're going to have to raise rates again. And we know what that means, right? More pressure on banks because also just a random note I have here, and this is just a random article I read a while back, but it's very true. And the faster rates rise, the more of an issue this becomes. So, and this is still coming, by the way. The interview with my grandpa about his time on Wall Street. I just have to work it out. It's been such a busy summer. I'm just trying to do everything. I'm trying to live my life to the fullest, but also grind to the fullest, but then also find time to take care of myself and family, girlfriend, friends, all that stuff. So, just doing this balancing act that's called life, right? But it's coming. I promise it's coming. Interest rates article, right? And I could pull up this article. I thought it was a pretty good point. It was basically someone saying like after some event that was like, oh yeah, it'll be better now. Some statement he was saying, I don't think there's anything that has to be anything has been put to bed. I think this was after the First Republic crisis, or was this Silicon Valley Bank? I don't know. All the time blends together, but let's just open it up at this point. But read this quote here first. I don't think anything's been put to bed because banks are still impaired by losses on long-term securities. Those unrealized losses are still there and they will affect banks' decisions about lending, and they have to be very cautious. I think that's very true because if you had a 5-year treasury note that you bought 2 years ago, you're getting a terrible interest rate. And if you were to realize the loss on that, it's trading, the bond face value is trading significantly lower because who in their right mind would buy that in this high interest rate environment? So the price of it the face value just absolutely tanks. So with that happening, oh yeah, this is First Republic Bank right after that. It's just going to put more pressure. And then if you raise rates more, that face value just falls more. And that's just more of unrealized losses for banks. So we'll see what happens, right? Like anything else, we'll always see what happens, and numbers will tell the story. But Federal Reserve is expected to announce another 25-point increase in its benchmark interest rate on Wednesday. And keep in mind, this is from May 2023. A move many believe could be the final rate hike of the current cycle. Was it? Was it? And now they're talking about right now. This is it, right? We're tightening up. But apparently supply is outweighing demand for treasuries, so it's kind of hard to not raise interest rates when nobody's buying your treasuries and you have a lot of accumulating debt that you have to pay off, a lot of debt payments to make as the US government. So it's crazy. And then the best website is the St. Louis Fed website, and this is also something I have here. Oh yeah, right here. See everything. See interest payments right now. I believe they will signal they expect to pause. Luke Tilley, chief economist for Wilmington Trust, told Yahoo Finance in an interview, the data that's come out in wake of the last summary of economic projections fits with the median forecast. Not to say everyone thinks the same thing, but lots of statements from FOMC participants point to them wanting to take a pause here. In March, the Fed's latest set of economic forecasts showed most officials expected interest rates to rise above 5% this year and remain there. Data from the CME group showed investors are placing a nearly 95% chance on the Fed raising rates by 25 basis points, which they did. So this is where we're at. Yeah, see, oh, the chart just kept updating. See, that was right here. And then boom, this was the most recent one that we had. Bond portfolio manager, Wilmington Trust. I think they'll use language to get the point across that we may just have to stay higher for longer. We're not necessarily going to pause. I don't see them say we're going to pause now. I think the Fed want to push back against rate cuts that the market is priced in. And also keep in mind, the market's a funny thing, right? When you look at the S&P 500, throughout the rate hike cycles, it was doing just fine. And now all of a sudden, as of late, not doing as fine after the U.S. credit rating was cut. And it's Finch, what is it? It's totally slipping my mind right now. Fitch, yes, the Fitch downgrade. So since that happened, right? I mean, all of a sudden, kind of momentum was killed off after we had this like bull market that seemingly came out of nowhere. And not to say anything's for certain in the short term, I truly don't know. But what I look at it as is the market really trades, in my experience, so much based on the expected versus the unexpected. So interest rates rising has been expected for so long. It's been expected. And even that article talks about how lots of banks, lots of analysts are all, and even that tool that calculates 95% chance that the rates were going to hike, right? All that stuff. All of it was pointing towards rates rising at this rate. So the market essentially priced it in and was aware of it. And to me, that gave the market confidence as a whole, generally speaking, because there was certainty. Now, the idea of, hey, well, maybe they're actually going to raise rates more, that's uncertainty. Fitch deciding to cut the U.S. credit rating for the first time in 10 years, that's uncertainty the market didn't see coming. So any other uncertainty that were to come out of nowhere, especially if it were to be another black swan event or something, I mean, I don't know about that, but just any kind of chaos could lead to some downward momentum with the market. Also, because the market's always going to go up, it's always going to go down, it's going to left, right, up, down. It's a Fugazi, it's Fugazi, it's Fuguzi, right? That's how it goes. So, truth is, nobody ever knows in the short term. That's kind of the summary of that. But the more I watch the stock market, as the older I grow, the more I just see as a whole, it trades based upon the expected and unexpected, and confidence in what is said is going to happen actually happens, type of thing. But all of what I'm saying right there, you should listen to very loosely. It's not like, oh yeah, the rates are expected to go up. Yeah, that means the market's just going to go up next time that happens. It's not that simple. It's always based upon what's happening that moment in time. And it's also always easier to look back and be like, oh, well, yeah, that's why the market's been going up, right? Of course I'm saying that now because that's what's happened. Was I saying that when the market was going up here? No, I don't think so. I think I was like, yeah, I'm not really buying this bull market. But at the same time, I was like, I don't know, because again, I don't give financial advice. So I'm just analyzing in real time. That's all I can do, right? And just keep an eye on things and just keep getting better because that's what it's all about. But let's check chat. Happy 14th birthday. Thank you, Danny Berger. If bunch of people are leaving, should I sell GME? Thomas, of course, I think you have to make your own individual decisions, but I don't see anybody leaving. I just like the stock. I think you should definitely make your own individual decision, though. That's really important, always. But, don't just blindly follow the crowd either, or just listen to me. Just, to me, that doesn't make sense. If Ryan Cohen leaves, sell as fast as you can. Fair enough, Fresh Red. That's fair. Or is a new blood going to be hired and they'll have a fresh take and make it a better org? Thanks. No, yeah, I mean, honestly, I think they need Ryan Cohen. He's the most vested interest. He cares the most about the success of the company. He would financially benefit the most from that. And keep in mind, this whole time, he could have sold shares at any point. He could have paid himself at any point for being chairman and now CEO, still not taking a dime. Just where else do you see that? Where else in the whole market do you see that? I don't see any other company lined up in that scenario. And then on top of it, to me, the icing on the cake is everything that happened in January 2021 that's allegedly underlying, right? So, again, I've said this in the past, I'll say it again. If the company just succeeds and drives forwards and inevitably repurchase shares, dividends, shareholder value incentives, everything underneath bubbles to the surface, and we'll see what happens, right? There's theories it's going to happen fast, it's going to happen slow. I think the theory of MOAS, nobody ever truly knows. That's what I like about it, that it's almost like a mystery, and we'll see when it happens. Just like I was talking about the market in hindsight, it's way easier to be like, oh yeah, it was this because of that. It's going to be the same with the mother of all short squeeze. People go, oh yeah, it was because of that. But again, I don't give financial advice. If you don't think that's going to happen, don't buy the stock. If you don't like GameStop, don't buy the stock. It's that simple. So, but CPI numbers important tomorrow. You want the ground pillars of GME to stay with the company, namely Cohen, Adel, Chang, Grube, and Zhu. Exactly. The rest isn't that important. It's a really good point. Also, thanks for transparency. Thomas, yeah, of course. I mean, I'm not sure if, let's see. Rest is important. Yeah, no, that's definitely true, Fresh Maker. But at the same time, I don't think you want executive turnover forever. But I feel like part of it right now is just building the most efficient core team to just execute at the highest level. And when you have that kind of culture from within, anybody else that's being hired as things start to grow or positions open up, there is a high expectation from the start because that's the culture of the whole company. So I think it's a big culture shift also going on from within of being extremely frugal. Because if you read old articles and information about Ryan Cohen's time at Chewy and also looking at some of the stuff Larry Chang said, a lot of it was about saving the most amount of money as possible. There was a culture of being frugal at the company. So something like that, I think, really goes a long way. And it's not simple to just instantly put in place, especially keep in mind, Brian Cohen didn't start GameStop from the ground up. He came in, acquired a multitude of shares, and he had to adjust any problems going on from within, get rid of all the crap that's been going on for a long time. Because for years and years and years, the retail infrastructure, like the retail technology infrastructure, wasn't upgraded. There was a bad website. They had to redesign that. There wasn't even really a solid app. There's doing a lot more deals and things you actually see thriving companies do. Whereas if you look at their website a couple of years ago, it simply was not the same. So there's so much you had to adjust, and a culture shift takes a really, really long time, at least in my experience. I worked at Marshall's. I was a manager, and I was there. Oh my God, it was crazy. Like 3.5, 4 years was it, or 4.5? I don't even know at this point. It was a while back, but I basically worked it from I was 16, almost till I was 21, or 17 to almost 21. And I worked my way up the ranks, and I saw different managers how they did different things. And as I was starting to work my way up, the store was pushing forwards and trying to do more, and the culture changed, and how things were as a whole changed. But it always took a long period of time. It was never simple. It was never just like bring this person in and it's fixed. So a culture shift takes a really, really long time. And on top of it, with a startup, you can set the tone from day one. When you come in, take everything over and bring in all your own people, it's a huge, huge task because you have to keep hiring more people, right, that are on board with the culture and keep analyzing those that are already employed with the company, seeing are they really buying into this culture or are they just here for the paycheck? Which, of course, that's always going to happen with any job, right? In some shape or form, there's always going to be companies of people that are just doing it for the paycheck. But when you're compensated fairly and you see something to actually work towards or the culture from within, you're treated with respect, these small things I think really go a long way and impact how the company actually operates. I'm not saying that everything I'm saying right now is going to make them swing to gazillion dollars of profit all of a sudden simply by just changing the culture, but I'm just saying all of these different things have been going on for quite a while. And that's just what I believe. And if you don't believe that, that's fine. There's always gonna be people that disagree. And I'm okay with the risk to reward with GameStop. That's what it always boils down to for me. If somehow everything falls apart, all were to go to hell, GameStop goes zero, goes bankrupt, which would make no sense considering they have 1.4 billion in cash and no debt at this time. So there'd be a lot of signs leading up to it. It's not just gonna happen like that. But even if all that were to play out, I can rest assured that I would be able to move on with my life. I'm not going to be drowning in debt because I'm not buying GameStop on margin. I'm not trying to trade call options or puts. That's not me with GameStop. So, all in all, know thyself. Know thyself for sure. So, I know where I'm at with GameStop and I'm just going to keep riding the waves because I just like the stock, right? But let's see. Um, let's see. I wonder why they pay Patel so much. He must be really good. Yeah, I was kind of thinking that as I was looking at it in comparison to DJ's payments. I keep calling her DJ now. Diana's payments, right? So I also want to check out Robinson's letter. What was it, like Tim Robinson, right? He's the GM, or he was promoted to GM after Furlong was let go. So I'm not too sure. But also, yeah, I think Furlong was let go, and then Diana resigned. So let's see. Yeah, they seemed like a big culture shift recently, like pushing people to in office instead of remote makes people grow, but also clean up after the cruft a little easier. So lots of folks just working for the paycheck are going to leave when they make pushes like that, leaner and more dedicated. Exactly, Thomas. Yeah, I think that's absolutely right. Where you're more lean in terms of employee count, but more dedicated in those that are actually showing up. Because you're absolutely right. I can tell you from my job I work now, it's part remote. And I always feel like I have a better day when I'm in the office. And I'm not saying I don't get things done when I'm at home, but I just feel like there's more things that I just, or situations and information I become aware of just by being there around the people. Like the culture just naturally like rubs off on you. I mean, I don't know if it's the best way to say it, but there's such a difference, right? I think anybody knows this that works partly remote and partly in an office or has done one and then now does the other. There's a significant difference when you go into the office. So I remember during the pandemic, everyone was saying, oh, work from home, work from home is the new thing. The office is dead. All these corporate companies are getting rid of their offices. But I don't know. I think there's a lot of companies that are trying to get people back in for that reason. They would rather pay the hard workers more and keep promoting them, I would think, because they're going to keep grinding and they care and they're going to show up every day than just having enough, like having more hands on deck. So that really seems like what's going on. And to me, that's really exciting because that means cost cutting and just maximum efficiency. And when you have that, even if Web3 doesn't take off right away, things don't even work out. They somehow do eventually get rid of Web3, which I don't think they're doing. I want to be very clear. I think they're still involved in Web3. But let's say it somehow goes away. They just operate the most efficiently. They keep sales steady to a point where they're keeping a net profit coming in. You then have capability to do share buybacks and dividends. And when you have tons of individuals directly registering shares and insiders acquiring shares, share buybacks become incredibly impactful, which we haven't seen one yet. So that based on those two things, when you just do the math, right? Okay, total shares outstanding minus insider shares minus DRS shares. That's less than the outstanding shares, right? And then also that doesn't even include all other shares out there owned by individuals in non-DRS, owned by individuals in IRAs, owned by institutions. So when you math all of that out, it's like, okay, a share buyback could be incredibly impactful. It's just a matter of when and maintaining a profit in order to do that. And also, I think the threat of doing it is, or it's, I don't want to say the threat, but like the idea that they can do it at any time. Anybody betting against the company would have to keep that in the back of their mind. And if they don't, they can, yeah, sure, fine, keep driving the price down, drive it to a 52-week low. If GameStop decides, okay, we're going to use the remaining $100 million that we have in our old share repurchase plan, which they've had in there, it's in the latest 10Q, it was in the last 10K, or maybe it's just in the 10K. But since Ryan Cohen took over, they've had a old share buyback program that's still in place. At any point in time, they could buy back $100 million worth of stock. And with 1 billion in cash, about 400 or about 1.1 billion in cash equivalents, about another 300 million in marketable securities, give or take, you have that capability where it'd be like that 100 million is such a minimal amount, and they could do that any time. So if the stock price were just cut in half in the next week, that's a ton of shares they can buy back at an incredibly low valuation. And then you have a situation where they only use 100 million and they may have been able to buy back a more significant portion than if the price had stayed flat or began going up. So all things to consider. Then another company that's actually announced a share buyback is Palantir. And when I look at them, I'm like, damn, they're now announcing the share buyback. But I mean, it doesn't necessarily mean they're going to buy back shares right away. I guess my thought is they're anticipating a dip soon, and then they'll start acquiring shares, maybe around $10. I don't know. I don't follow Palantir enough to know that. I do follow it, but I don't know it like that. And it has a much bigger market cap, so $1 billion share buyback. Also, you don't have directly registered shares with that, so I think that is a matter of it. But what I think is, okay, all in here, they weren't interested in buying back any stock, but also all in here, they weren't net profitable. And now they've just recently said, we are going to be net profitable and we intend to continue to be, or we expect to continue to be net profitable for the future and beyond. And then after they said that, the most recent quarters reported, and then they announced a share buyback. So that makes me think, okay, maybe in early 2024, we see GameStop starting to buy back shares. And imagine they're buying back shares at this price point. And think about all the other shares you may accumulate as an individual, or individuals as a whole may accumulate over time. And there might be other insider purchases leading up to that, right? So all just food for thought there, but that's somewhere where my head's at. Let's see, offices are dead. You can't entice employees to go back to a commute. Employees are literally taking pay cuts to work from home. Yeah, I mean, partly, but at the same time, I just feel like there's such a difference when you go in. So, I mean, I feel like it depends on the individual, it depends on their role, and it depends on the direction the company's going. So, I'm not just going to say, yeah, they definitely have to go to the office. So, I see there's a possibility for remote work, but I feel like the in office is very impactful. Or you always need at least the core team meeting up sometimes to be touching base and goal setting. Because I think if there's a high standard and people are working from home, if they're meeting that high standard, that kind of dismisses the idea of, oh yeah, you need that strong culture of being in the office because you can still have a strong culture remotely. And also, you have to remember when you're remote, you open up the talent pool more because you're not just looking in a specific area. But if you read the offer letters for uh, near Vinny Patel and when you look at DJs, they were basically compensated to move to Texas. See, they're both in Texas. But all just food for thought. So lots of folks just working for the paycheck are going to leave and they make pushes like that. Okay. A lot of remote work is replaceable with AI as well. Maybe not entirely yet, but soon enough. Yeah, also a fair point, Thomas. Definitely a fair point. We'll see. AI really scares the crap out of me sometimes. I'll tell you that. But it's here to stay, right? And I'm trying to use it and become more and more familiar with it and just use it for research purposes. Even trying to get into like for making shorts and stuff like that I'm kind of trying to build out. And I look at it as like, yeah, it scares the crap out of me, but I can just sit on my hands, right? And then I'll get left behind. I'll get left behind. If I'm not utilizing it, someone else will out there and move forward. So I think the reality is everybody as a whole has to adapt to the fact that AI is here to stay. It's going to be with us the rest of our lives. But also, it's like, it's incredibly alarming how many freaking movies and like stories have been written in the past, like scripts about how the robots take over when we just keep developing technology enough. And you have some people saying like, "Hey, let's slow down on this," but then there's other people like, "WorldCoin, more AI, more," and it's like. But I think overall, you got to use it, right? Use it to whatever advantage. To me, ChatGPT is an amazing research tool. It allows me to just understand things because I can ask it very specific questions, but I always try and fact check if it's going to give me like, oh well, this happened on this date. If something like that, I always try and like look it up. Whereas I'm like, tell me what this line means on the balance sheet. And then if it explains it, I'm like, can you clarify the part about like if I said, what does stock-based compensation mean on the cash flow statement? And then they said this, and this. Vesting. Okay, tell me more about the vesting aspect of it. Just an example. Or I could literally actually pull up my ChatGPT from today when I was doing research just to show you guys. Let's see. It depends on the office. Some, yes. If you've got mostly senior engineers, I'd say remote is great, but it's hard to train juniors when working remote. You're not getting it. Employers want in office. It's better for the business, but they can't get it. It makes sense. Another thing. I see what you're saying, but I feel like you can get it if you really, really look particularly. It might make it really difficult and more grueling, but I think it's still possible to get it. But I see what you're saying where the world as a whole, it might be shifting in that way. And especially a lot of younger people my age are looking, I would say, happily to work from home. But I find more and more personally, like going in more, I'm becoming more and more efficient at what I'm doing. So I definitely like see both ways, but I think definitely yeah for engineering that is a good point, Thomas. Because actually I heard Mark. I don't really like to say oh yeah Mark Zuckerberg said this. It means it's smart, but I think he did have a valid point with this. Where for engineers it really makes sense to work from home because they might be really really involved in studying code and it's so tedious. You're so locked in. Somebody coming over and just saying something random to you, that person not trying to irritate you or they're just office culture, like you just talk to people in the office, right? But that might throw off that entire thought process that individual's having. So like I kind of see it for positions like engineer. But I think that's also where we can kind of recognize where it really depends on the role, on the office, on what's going on at any moment in time. AI is like books. Some people will use them to better themselves and some won't. Those that read tend to go a little further. Seems like a somewhat similar analogy. I see it, Thomas. Yeah, I think so. ChatGPT is a notorious liar. It makes up news stories that never happened. It's unreliable. Yeah, no, some stuff is definitely weird. Another thing, but this is what I mean. Like I use it for work to like grammar correct stuff. But also I did this just to see how it would summarize meme stocks. That's how it started. And again, for association of GameStop AMC. But I said if a company had an employee that would have had stock vest over a multi-year period, but only 5% of it actually vests at the employee decides to leave the company, how does that impact the company's financials? I'm trying to understand how shares that would have been vested were represented on a balance sheet and or cash flow statement. So this at least gets me pointed in the right direction, and then I can look for more legitimate sources. But I'm never really asking ChatGPT like, what was the stock price on this date? Because you're right. I feel like in times I've tried to do that, then it doesn't work. It tells me something completely bogus. So definitely use it for what's best for you, but understand, yes, it's not just absolutely correct. And in a way, as it becomes more and more accurate, it becomes more and more alarming because it's like, how is this thing so freaking accurate and smart all the time? But I don't know. I think also, there's just more to learn. There's just always more to learn with AI and all this information. But let's see. Equity section. The unvested portion of stock grant that was forfeited by the departing employee would no longer be represented as a potential future equity obligation on the company balance sheet. This can lead to a reduction in the stockholders' equity section on the balance sheet, specifically in the line item related to additional paid-in capital or stock-based compensation reserve, depending on the account treatment of the company. So, whoop, get my phone off the screen. So here, additional paid-in capital. Where are we? Nope, stock-based compensation, shareholders' equity. Additional paid-in capital. So this is for Q1 2023 versus Q2. So it increased. So I would imagine now additional paid-in capital will be decreasing because of that. And then in the income statement, typically companies recognize stock-based compensation expense over vesting period of the stock grant. If an employee leaves before the entire grant is vested, the remaining unvested portion would not be recognized as an expense. The result would be a potential reduction in stock-based compensation expense line on the income statement. And to me, I read that as for the next earnings report, which is where we see it here. Cash flow statement, stock-based compensation expense. It decreased year over year, which I think a little bit of slimming down that might have been part of it. Then also maybe a lot of initial grants. And then cash flow statement, operating activities. The impact of cash flow largely depends on whether so this is mixing things up, cash flow statement, but also the same for the income statement. Or I think the income statement. Let's see. Recognize stock comes over the vesting period. So it would just be in SG&A as far as I'm aware, right? Yep. Oh, income tax benefit. Nope, that's an income tax. It's important to note the accounting treatment and reporting of stock-based companies can vary depending on the specific accounting standards and practices used by the company. Generally accepted accounting principles and international financial reporting standards provide financial guidelines, blah, blah, blah. For stock-based compensation expense, is it being recognized each time the shares vest, or is it all in the beginning of the vesting period? So it's either graded vesting or cliff investing, which I believe it's graded. Under the graded vesting method, stock-based compensation expense is recognized gradually over the entire vesting period. Each tranche of the grant becomes vested results in a portion of the total expense being recognized on the company's income statement. This means that the expense is spread out over the duration of the vesting schedule. So that's what I believe it is, but if it's and I don't know for sure. So again, I'm just a guy talking on the internet. So always do your own research, and I'm just literally researching live, presenting ideas live. So never just blindly follow me or anybody in general. I think that's just good to know, or always good to remember, right? And that's why I'll never stop saying it. So if they did cliff vest the shares though, that would be extremely beneficial because the money will be unvested, so to speak. Like it never fell off that cliff, so to speak, because it never actually got to DJ's pocket because she only got 5% of her shares vested. So companies can choose the best aligns with their compensation philosophy and accounting policies. Specific details about stock-based compensation is recognized should be disclosed in the company's financial statements and footnotes. So, let's see. Stock-based compensation. Okay, see, that's where additional paid-in capital, where we saw that rise. Let's see. Stock-based compensation expense. Balance at January 29th, 2022. So now is that additional to be paid? Let's see. Let's see how further explain stock-based compensation expense and how it appears. Wait, expense on the statement of stockholder equity. That might have not been the best way to explain it, but let me hit the chat real quick. Okay, mix-up stories that never happened. It's unreliable. Yo, Xvit, what up? Thanks for stopping in. Good to see you. It made up a DTC press release, a fake URL on the DTC website, and wrote a fake news story from January 2021. Damn, that is crazy, another thing. So yeah, definitely fact-check everything. Absolutely fact-check anything that it's going backdated on. But I think for just trying to understand things, it's still a good tool. That's where my head's at least. BBY going bankrupt. Bye-bye, baby. Yeah, so this JJ, I don't know how to say your name, but thank you for being here. I know I've been coming back for a little bit now. Yeah, I honestly don't think it's Teddy, triple, quadra, mega merger or anything like that happening. So, yeah, I think it's just really the end of Bed Bath. Unfortunately, right? I don't want to see anybody lose money, but people want to be in it. So be it, right? Do what you want as an individual. That's what it's all about. But I think GameStop's still in a great spot. So just keep riding the waves with GameStop. But that's just me. What's up, Tetron? What's up, chat? Let's fucking go GME. Fitzy, good to see you. Hope you're doing well. Thanks for stopping in. Big homie for sure. But damn, I can't believe it's already 6:50. Yeah, this was supposed to be a fast stream. So, yeah, I'll probably have to actually wrap it up soon because I do have to get going. But what else did I want to touch on? Is there anything? Executive compensation. But I'm so excited for the next earnings. I just really want to see where the company's at and just how they continue to transition. And I think really most importantly, it's about seeing improvement quarter over quarter and then just turning a huge profit in Q4 for holiday spending. I know I'm absolutely going to try and shop GameStop as much as I can for my holiday spending this year. I would imagine tons of other individuals feel the same. So Q4, I think, is really also the point too. They could have a lot of their costs significantly cut. And even if they just have quarter over quarter improvement for Q2 2023 versus Q1 2023, sorry, Q2 2023 versus Q2 2022, I think that's still significant. And then as long as Q3, we also see improvement over the same quarter of last year, then a significant improvement in Q4, that's enough to make them S&P 500 eligible. Of course, it would depend on the market cap at that time, but then that's also where they can possibly buy back stock. But the only thing they really need is net profitability and the market cap. So you need the past 4 cumulative quarters to be net profitable combined, and the most recent quarter to be profitable. So what did GameStop have in the last quarter? Have it right here. Loss of 17 cents. Wall Street estimate right now, 14 cents, right? Let's say the loss was 10 cents quarter over quarter, right? Or let's say 9 cents. Definitely not good, but still an improvement, right? And then Q3 comes along. Q3. And then it turns out to be, and then Q4. Just start down there. Whoop. Right, this is just all hypothetical scenario right here. So let's see, Q3 comes in, loss of 6 cents. So then we would have cumulatively negative 17 minus another 9 would be negative 26, minus another 6 would be negative 32. And then let's say they have a quarter that has 45-cent profit. So all of a sudden 45 minus 6, 39, minus 39, sorry, minus 9 makes it 30, minus 17 makes it 13. They would have positive EPS and net income for the year, and it would be enough to make them eligible for the S&P 500. Of course, they would have to maintain the profits, and what I fear is when it comes time for S&P 500, it's just unfortunate, but it seems like there's a lot of colluding, right? Or just like-minded interest amongst individuals betting against GameStop in places of power. So, will the powers that be let GameStop enter the S&P? But I think if it's eligible, there's no reason not, right? But we're gonna have to see when that time comes, because something I've definitely learned from this saga is always expect the unexpected, and nobody's truly on your side. I mean, and there's always going to be controversy. And actually, that brings me to a random point I want to make before the end of the stream here. But let me hit the chat one more time. Cheers all around. What's up, bro? Can't wait to quit my 9 to 5. I feel you, man. I feel you. Question. So is Loopring still related to GME, or is that deal off the table because of the wallet news? As far as I'm aware, they're not fully working with Loopring, but the NFT marketplace is built upon it. So I'm honestly not entirely sure. But it seems like any relations with Loopring aren't really evolving in any which way, but they're a part of the NFT marketplace. Or I'd have to kind of look back, because as far as I'm aware, they were a part of things there. So I don't think they're not anymore. So I haven't even like thought about Loopring in a long time, honestly. I remember they were like one of the first partners. So as far as I'm aware, I don't think it's completely off the table. I think it's still involved with the marketplace, but I don't think it's going to be involved in player. And if that's the case, maybe it's something they're kind of shifting away from. But I think it's kind of something to just keep an eye on. And I'll try and do more research as well and have more info next stream. But haven't seen too much on Looper. Like I still follow some stuff like on Twitter and all that, or X, whatever you want to call it. But the quick point I wanted to make before I wrap it up here is with GameStop, you have to understand there's always going to be disagreements amongst individuals. And how I think the FUD really just pushes through and things get derailed, so to speak, is just what the media does, right? And the purpose of the media. And I think it's the media as a whole, just beyond financial media. You pin people against each other. So they're just always arguing, and they're busy arguing and just disagreeing and talking nonsense instead of actually using their brain and further understanding things. So I'm trying to stay out of controversy. Like I have no problem, dropping the gloves when it's needed, so to speak. But at the same time, I understand like this versus this, or oh my god that, oh my god that. When those ideas are like pushed amongst the people like GameStop, I feel like that's where there's a lot of division, and that's intentional. Just the same way I think like politics, it's intentional in that way, where it's like, oh, left, oh my god, the right, they're so extreme, they're more extreme, like it's all like that, so that everybody's just always fighting and fighting instead of like any real issues actually being solved, right? How many real issues have been solved? Problems just keep getting worse, right? I mean, I'm not a freaking politician, but I think that's obvious to everybody as a whole. Like the world is not really improving, right, over the past several years. Oh yeah, we're gonna get through this. This is just a pandemic, and then everything goes back to normal. When do we ever go back to normal? I don't remember going back to normal. This is just a new world we live in now. So I just feel like the media as a whole is designed to pin people against each other and just argue endlessly, and just craziness. I don't know why. I mean, that's up for debate, whatever. I'm not getting into all that. But the point is, I think you just have to try and always like have a conversation. And I'm not saying I'm perfect or I'm an absolute champion of everything I'm saying, but I think there's no doubt that the media is constantly just trying to divide people or just make them butt heads. And if you were betting against the stock, like GameStop, wouldn't it be perfect to make these other meme stocks and make people just constantly argue about them, right? So make it this whole category. I think it's just all part of this big fugazi, right? So I don't know. Those are kind of some final thoughts here. Didn't they want Tesla in the S&P at the time? But once you enter they didn't want Tesla in the S&P at the time. But once you enter the top 100 companies in the U.S. for an extended period of time, they don't really have a choice, do they? Very valid point, XBit. I think you're right, because I do remember when Tesla joined the S&P, it was already one of the top 10 names, which is insane. That was like unheard of at the time. I always knew Bill Pulte was a shill. These millionaires never want the poor to win. Give it to them less power. Leroy, thank you for being here. Yeah, I don't know. I mean, Pulte seems cool, but then like I don't know, like BBY and like I get it. Like you're just trying to talk to people and get your name out there, but like I don't know. It's just it's hard, and that's what I mean. Where it's like hard to trust anybody. Like I don't truly know what I think, and I just like yeah. I just think to myself like Pulte can do his thing, but he's definitely not like a 100% ride or die GME. That's just kind of where my head's at with that. But I see what you're saying, Leroy. I see. Pulte trying to build an influence. He's a donut. Cheers. Thanks, bro. Cheers all around for real. Pulte's a good guy. We don't need him for GameStop, but at least he's giving money to the people. Yeah, I like that take, Freshmaker. Exactly. It's like I think he's a good guy, but it's like we don't need him to be like this big champion of GME. Like if you want to associate with Bed Bath and that, you can be a good person to people that like GameStop. You can be a good person to people like Bed Bath. You can be a good person in general. But I don't think you then have to be like the champion of GME. But I also see what people are saying in the sense like that's that psychological shift, right? That's those games that are being played potentially in people's minds, right? So I don't know. That's kind of where my head's at. He's a good guy, but he's a cream-filled donut. Yeah, exactly. I mean, yeah, I think that's a pretty fair analysis. But so I'd open my buy position for BBY is a short position. Is this a fraud? Okay. I don't know why that's on the GME subreddit. Guys, did you know you can buy stonks with your retirement account? Time into a brokerage account. BBRS. Soon may the Tendy Man come. That's an absolute classic. Hey, I like this. I remember I did this a while back. I did it with my brother, the GME. Obsessed with getting better. Who are you? Issued grim financials, 16 billion in corporate leases. With less than a year of cash on hand, their failure won't hurt the commercial real estate market. Yeah, we were incredible how much that thing has collapsed. Ape. What the heck? But yeah, anything else interesting here? It'd be nice if it plays out like this for sure. Hit with 549 million in fines for the use of Signal WhatsApp to evade regulators' research. Can't say I'm surprised. The day that people understand this image, everything changes. True. And there's like a movie about, or I don't know, I saw something, it was like ants or something, or I don't even know, but they were basically like, don't you get it? If one of them stands up, then they could all stand up and they will suddenly realize they're stronger than us. And I think that's the whole idea of, left versus right and this versus that. If everybody just was like, hey, we can agree to disagree. This is crap, right? I mean, I don't know. I think that's more politics, but whatever. Crazy. Oh boy. See, this is why I got to get back on Reddit more. This is a lot of stuff I got to like get caught up on that I feel like I haven't even really seen. Sure. Let's see. Hey, small GME YouTuber starts to read about Instinet and the 6 defaulting companies. Hey, let's go. Appreciate you, user slash ringing bells. I don't know. Was that you? Another thing? It could have been, right? Maybe. I don't know, but yeah, I should maybe touch on it more because why not? But I don't know. I just always try and like stick with what I know, and that's like such deep like craziness and. Yeah, I'm not saying I'm gonna like shy away from it. That's not what I'm trying to say. But this is pretty awesome. Like, let's see, any haters in the comments? I'll be honest, guys. If you want to look me up, I'm on r/GME Meltdown. So I have haters. If you look up Tetron on GME Meltdown, it's pretty funny. Like, oh, this guy looks like he's this or that, and I'm like, okay, you're saying all that behind a screen. At least I show my face. Gets a tad YouTube gassy, as in gasses on about nothing and reads to confirm a bias. Instead of just reading, it's almost better when they started in opposition. However, to this young man's credit, he circles back around to the information and seems genuine. Thank you. His curiosity and what appears to be good nature will be quality traits to help in the future. Thank you. It goes without saying, I'll say it, that this YouTuber is not for me. Fair enough. But, I'm all about improving and just getting better. And, yeah, so I'll just keep grinding. That's all good. No worries. But I'll still take the post, so I appreciate that. It's nice enough to post it. That's good. Let's see. He's a good guy, but he is a cream-filled donut, and he is buying some GME shares. He doesn't own BBQ, BBYQ, he owns GME, doesn't he? Or no? Yeah, yes, PP now thinks that he is on the right track with BBY only because Pulte was once on his stream. What a clown. Yes, Pulte owns GameStop shares. Pulte never said support BBQY. He was just being nice because he's a donut. I like donuts. Yeah, I think that's a pretty good altogether summary right there. But yeah, let's see if there's anything interesting on Superstonk, and I'm going to call it a day. Damn, it's already... Time flies. Time really flies when you're having fun. Really. Gotta love live streaming. Always gonna keep getting better. That's what it's all about. 3 days to rehypothecation, ever decreasing volume, the main star rug pull, the end of the GameStop wall, and it shills up the wazoo. A theory of recent events. Too long to read. Apes are still buying and DRSing. We are not an entirely fraudulent system. Mother of all short squeezes is imminent. Let's see. American Airlines. ETFs. Just pretty general thing and just not surprising. It always kind of goes that way, right? 25 trillion sector that includes VCP and hedge funds is battling new rules to shine a light on what they're actually up to. The clock is ticking. U.S. action on short sellers seems very likely soon. The U.S. Congressional Research Service issues report on short selling yesterday. And oh, the A-list blockbuster movie Dumb Money is coincidentally releasing in September. Interesting. Yeah, I want to see that movie. I mean, a lot of people have said to me like, "Yo, that movie's gonna be good." So, what's going on? What's it gonna be like? And I'm like, I don't know. I think it's got good actors, but I don't think it's gonna tell the true story. But I think it'll still be worth a watch, just cause. But see, of course, you have haters. You're a GME shareholder that doesn't own AMC and BBQY. And YouTube is owned by Google, which was founded by the CIA, which is in cahoots with private equity and Maj 12 infiltration of Reddit. Yeah, no, Reddit, aren't they going public soon or something? Nathan from Florida, I think he tweeted this or he said it to me. I don't remember, but I think he was tweeted it. But it was like Reddit definitely did r/place again, the thing where you like did all the pixels. I mean, I don't know. I'm not like a huge Reddit guy. The most Reddit I've really ever read is like Superstonk, and I've just found it occasionally throughout my life. And also I was on Wall Street Bets like way back in the day. But I think he brought up a good point. It's like, yeah, that's a great way to boost engagement and make the numbers look really good for Reddit's user base by having r/place. So yeah, it seems like there's maybe some weird stuff going on with it becoming public. So let's read this post real quick. Let's see, you're not missing much by not reading it. Wait, let's see, you're not missing much by not reading it. Okay, gotcha. So it's not too much here, but Linda Real, thank you for just hopping on. Appreciate you. Good to see you. So let's just look through real quick though, because yeah, I do have to wrap it up. I do have to start going, so I keep going. If there's only liquidity, their application of course will become negative to me. How long does it take a prime broker to rehypothecate a share? A second, a minute, an hour, a day? It's an important question because the faster the brokers can rehypothecate, the more infinite liquidity they can provide. The likely answer came to me last night. It's 3 days. That's because the share must settle before it can be lent. Settlement equals T plus 2. T plus 2 equals 3 days. Ever decreasing volume from Jim Cramer. What's important when you're in that hedge fund mode is not to do anything that's remotely truthful, because the truth is so against your view that it's important to create a new truth, develop a fiction. Interesting. So almost every stock's incredibly high. If you go back a couple of years and look at the trading volume of GME, you'll see tens of hundreds of millions of trading volume every single day, oftentimes multiple flow changes every single day. Who's creating all this volume and why? We know retail does not account for this volume. Don't tell me it's day traders. It has to be hedge funds, investment banks. Why do they do it? Why are they trading every stock back and forth in huge volumes? The likely answer came to me last night. It's a smokescreen. The constant enormous volume that we see nearly on every other ticker exists to cloak the plays that the hedge funds and investment banks are making. It's impossible to detect elevated trading activity if every day is elevated. So why is trading volume on GME so low lately? It's because direct registration through computer share. When a share of GME is DRS, it leaves the brokerage system, aka leaves the DTC, can no longer rehypothecated every 3 days. Shares of GME have become so scarce that brokers are struggling to hypothecate, is that what it is? I hope I'm not saying that wrong, fast enough to keep up with the retail demand, let alone obscure true trading volume with millions of back and forth trades. It appeared that DRS movement was slowly and surely ratcheting up until the price of GME, until Mainstar rug pull, GameStop wall rug pull, Shills Zoo. Interesting ideas, but definitely doesn't mean anything for certain. But hey, badass. Hey, Linda Real cheating on our hands. Damn. Badass. Good to see you, man. Thanks for hopping in. Much appreciated. But yeah, hey, we really got all the big Still streaming. It's late as fucking Ibiza. Yeah, dude, Scott, I'm early. I'm actually early today. Usually I start around this time, but I actually have to wrap it up right now because I got to get going somewhere. But I just keep going. So props to you, Tetron. Keep at it. Thank you, Scott. Thank you. You know, I'm just gonna keep going because at the end of the day, I'm not here to give financial advice. I'm just sharing my thoughts and opinions. I'm just talking about something that's going on. I'm just gonna keep riding the waves and just keep becoming better for myself. And on top of it, I think I can provide better value by bettering myself over time. So just gonna keep the grind going. But yeah, for real, the whole family's here. And now I'm about to wrap this up. That's kind of bad. So let's see if there's anything else I should talk about real quick. But really, no, you guys are the best. It's crazy. I've been doing this now. I don't even know exactly how long ago I started YouTube. I'll check real quick. My first video, what was the MOAS? Or what is the MOAS? Or something like, what is the theory of the MOAS? And I feel like my explanation was so terrible. And I was just chilling in my yard. Let's see. Yo, this is crazy. The Island Boys. Did you guys hear about that? These guys are literally blood brothers and kissing on OnlyFans? What is going on? That is crazy. What the heck? That is... Oh. Like, I think, you know, everyone can do whatever they want, right? But incest? Come on, yo. Come on. And I don't know why it's popped on my feed. I saw a short of, like, one of them trying to explain it. Like, oh, different... I did some research and different cultures. Is that... Why? It's okay to, like, kiss your brother? What? Oh, my God. Just seeing them... yeah, they're just trying to do anything they can to stay relevant. But regardless, not talking about the Island Boys. Damn, look at that. And I did it in my glasses, and I did it in my good old dress shirt and sweater combo. Pretty funny. GameStop GME earnings mentions computer share. What's next for the stock price? And then talked about Palantir briefly in the beginning, Proterra. I wanted to try this like 60-second rundown thing. But, you know, this is a great example of I'm not a financial advisor and I've learned from my mistakes. I used to think Proterra had a great opportunity in the EV space because they were going to get involved in battery replacement and specifically trucks batteries that they were going to be working with, and they were buses. That's what it was. And over time and reading the numbers, I'm like, yeah, that's not going to happen now, is it? And I got out of it, right? And that was long ago, and it was a learning experience. So again, don't ever blindly listen to me. I'm not perfect. Planet 13 hasn't done well. I think it still has some potential in the long term. I mean, the product they sell, I think it's one of those like people that like it, right? So it's like about an experience. But again, I don't invest massively in it. And here, JP Morgan is long GameStop GME. Also, keep in mind, I haven't checked the financial reporting on it at this moment in time, but that was before I was really truly understanding. Oh yeah, BlackRock owns so much of the stock. Vanguard owns so much of the stock. But it doesn't mean like those are actually just straight up shares. There's ETFs, there's lending, there's all these different things that I'm learning over time, right? And this was a trade I was in, and I was like, okay, let me just try and put some information together and see what's the potential bull case. And then this hat, the most simple Bitcoin strategy. Now, my whole point in that video was like, you should just buy consistently on a long-term basis if you believe in it. And yeah, it's crazy. When you just look through all these videos, I'm like, damn, I've come all this way. And all these different spots, man, I'm literally all to go. I think that was my old car. I miss it. But crazy. And then this, I think this was a terrible video. I have a lot of improvement in explaining it. Like, I understand IRAs very well, but this was when I was in Florida. Just talked about what was happening in Netflix at that moment in time. BurgerFi, I had heard about the stock and I was in Florida, so I was like, all right, I guess I got to try this thing while I'm here. So, loopering at the time when it was a thing. Just going back through all the old stuff. Alabama Slamma. GME to the moon, motherfuckers. Yeah. FTDs are bullish. Graded collected popcorn. XBit, how's the water in Asia? I love you guys always just chatting in the chat. You gotta love it. Jesse, what up? Thanks for being here. Good to see you. Big things coming. GameStop Tech Company. The GameC smoke screen is in full effect. Always has been. Then yeah, this is when I was trying this like random game. It's at the start of things. Thoughts on Palantir. Collaborations. Thumbnail's hilarious. Update 1, update 2. The idea of split dividend. You know, I like to do this once in a while because it reminds me of the what I've gone through, right? And look, I'll show you guys right here. I'm not scared to admit this. Is GME stock Blockbuster, Sears leading the G America? This is at the point where I was bamboozled by Bed Bath initially, with Ryan Cohen being in it and everything happening. I was like, damn, maybe there's something going on here. But now I think BBY has nothing going, and it didn't work out in that way anyway. And I think I even had a video. Did Ryan Cohen sell BBY? Probably not. I can't see it right exactly here, but I don't know. I'm also going fast. But regardless, my point is it's about like the learning process, and feel like I've improved as an individual over time so much, and there's so many other people out there, like they aren't making YouTube videos, but they've come to understand things more and more over time. So by doing that, you just improve, right? So that's what it's all about. So yeah, this right here, Ryan Cohen selling BBY, probably not. The new Forum 144. Was it a false narrative? Because at the time, it seemed like, yeah, it's being pushed so much. But now I look at it in hindsight, I think it was the idea that, hey, let's push this other stock and make it seem the exact same way and get all this hype. And look, I fell for it. And I think right about here, I was like, yeah, no, this is all a bunch of baloney. And then my wisdom teeth were gone, and then my head was clear, right? And back to DRS. So it's all a process. It's all a learning process. You know, I was 100% wrong about Bed Bath initially, and it's a completely different situation back then. So again, I'm not scared to show this because so be it, right? It's all about learning. I'm really not scared to show you guys like the mistakes I've made over time. And then I should do another whiteboard video. Looking back, it's kind of reminding me. And then I remember SCP technology when I made the video on that, just briefly talking about it. Someone's like, oh, well, SCP technology is nothing groundbreaking. I'm like, yeah, it's not. But GameStop had no solid retail technology for decades of just being ignored and being underdeveloped as a whole because old management simply, evidently, just did not care about evolving towards online and just building better systems from within. So that's something that had to take place. And how retail technology works is it tracks inventory, it tracks sales, what's selling better here, what do we need more of there, all these different things, which when you have that data, you can make better decisions in terms of your inventory, just all these different small things, which now with Ryan Cohen's team in place for a longer period of time, they've been able to see a lot of this stuff over time. Shares very liquid, been for more and more liquid, right? At this time, I think I was talking about the volume probably being like a few million. This one, I was in a dark room. But let's see what else. Craziness. Oh, yeah, the FTX. Wow, yeah. When everything was going down, and then stablecoin situation. This is what I want to touch on more. I've become very, very familiar with the DRS versus like an ACAT transfer because I've said in the past, say it again, I work for an alternative asset custodian, like basically private equity and things like that. But I'm not like involved in the actual documents. Like I try and like look at the investments sometimes because I know a lot of shady things can happen with private equity, but it's also real estate and a bunch of other things. But regardless, I'm the transfers guy, and when I'm calling in to other custodians, I'm calling their non-ACAT transfers. So that has allowed me to get a lot of understanding. And I've worked with other transfer agents for re-registering private stock because there's situations where a stock is private, but it's still held at a transfer agent. So there's so much to always learn. That's also what I'm always saying here. Let's see, graded collection popcorn. Xbit does the water. What's a millionaire's? Water's nice. Be there soon. Xbit, Jesse, Tetron. Hey, the gang is all here. 100% agree with this. I knew very little in January 2021. Yeah, same badass. I feel like, also, it's funny enough, I feel like I knew everything back then. And then now I look back, I'm like, yo, I literally didn't know jack. Like, I knew nothing. So, probably again, I'll look back in a year and be like, damn, I can't believe I was thinking that at that time. But that's what it's about, right? Just continuing to evolve. And that's also why I don't like the name of meme stocks and the idea of like, oh, a GameStop investor is just an idiot, right? It's definitely just an idiot or just a bozo because it's like, but I think the average individual that's not invested in GameStop doesn't realize is there's tons of people that are like myself that have continued to research the stock and research the mechanics of the market as a whole, just improving constantly and learning more over time. Of course, there's a lot of other people that are just zen and they just like the stock. They just want to see what happens in the long term because they believe in the underlying fighting back against corruption, right? Or things like that. But point is, there's so many people that are getting so much smarter, and also there's less and less people. Not, oh, the big thing, the next big thing, right? The BBBY at this point, it's all accounts with Ryan Cohen as the profile picture, or like a bikini model, right? Or an OnlyFans, or maybe not even like an OnlyFans girl, but a female, Ryan Cohen. And that's not sexist, right? It's the idea of like, think about the OnlyFans models that used to push AMC, right? So it's like that playbook. And then it's always a Ryan Cohen image. So it's like, oh yeah, it's definitely that person loves GameStop. It's always like a crypto NFT or someone in their bio, GME, uh, BBBY, this, and that. So I think more and more people are starting. You can't do the same trick over and over and over again. So to me, individual investors of GameStop just continue to become increasingly smarter over time. And at the same time, they're just accumulating shares, and it's just a matter of what happens, right? We'll see. It's just a matter of how it plays out. But if you have a chance, guys, definitely check out this video. This was one of the most fun videos I did. And it was a big pain in the ass, and doing it and editing it, all that stuff. It was way more than I imagined, but I had a fun time doing it. So if you guys are ever bored and want to watch me burn my face off with hot ones, maybe I made it to the end, maybe not. You'd have to watch and find out. But yeah, this was the buying period. Boom, boom, boom. Then my most recent video. Still got to get a thumbnail there. And then I'm just trying to drop the shorts. You know what's crazy? I generated this short with an AI. That's the worst thumbnail ever. I have to change that. I don't know how to change that, but then yeah, that's my brother Zach. We're trying to get some stuff going soon. So, oh yeah, and I got to keep the trend going of say I love GameStop and then chug a beer. I should do that every weekend. I take a drink. So, gonna do that this weekend. But all right, yeah, no, I got to start actually wrapping up now, or I'm gonna be late. Before GameStop, I was a trend. I was a trader. Makes sense why your name's Badass Trader. But yeah, no, I think definitely the same. I think I thought I was an investor, right? Or I describe myself as like, oh yeah, I invest and trade. But now I see myself more as an investor because I'm not really taking trades and I'm looking long when I'm accumulating stocks. So I think really perception and perspective has changed as well over time. Animated money needs money. What a surprise. Yeah, it's crazy. You know, people are saying, oh, well, Barbenheimer's doing so good, right? Barbie, Oppenheimer. And then Sound of Freedom was out, and there's all these other movies that are doing well, right? It's actually been a year where all these big movies are coming out, right? Like, I'll say that. But keep in mind, all this is happening, and AMC still can't better their balance sheet or better themselves for the long term. And do you really think this momentum is going to last forever for the movie theater chain as movies come out increasingly faster online or to streaming platforms? So, yeah, not an AMC guy. And also, I can't help but wonder, you know, you see Morant's reposted it of that guy, like, talking about the custom basket swaps that came out in the court filings with the Bill Huang. That's something I actually want to dig into soon. But custom basket swaps, right? It's a crazy thing. And in the beginning, AMC was really the next big thing. They're both the same. They trade the same for a really, really long time. And I feel like at that point in time, if you were betting against GameStop and you allegedly, maybe, right? AMC accounts, AMC, that information is being put out there. I would imagine if that's being done, it's with the perspective that there's not going to be a ton of people holding the stock for the long term, and you don't actually expect to hold a basket of long AMC, short GME for a long period of time because you know inevitably AMC is not going to do well if you look at the numbers. I mean, right? This is all allegedly opinion based, but I think it's possible when AMC goes bankrupt, if they go bankrupt, right? I'll say that because nothing's for certain, I guess. And I don't know, people just keep buying the stocks. What if they just keep freaking liquidating or keep just issuing shares? I don't know. But I see a possibility where when AMC nears bankruptcy, swap positions blow up that are potentially short GME, long AMC. Because that's a great way to balance your trade, right? If you're heavily short a stock, if another stock is moving this in the same way and you correlate them very, very closely socially and in terms of the stock price for a long period of time, wouldn't that be a great way to just kind of slide out of your position and just kind of keep cruising along, assuming things will just be over, right? People just stop caring about GameStop. But the big difference is people just like the stock and they just keep buying. So we'll just see what happens, right? Those are just some thoughts. But oh, one hater that in the chat to before I leave, let's see. The earnings call last night from AMC was the worst. Oh, I believe it. Yeah, I didn't even realize they dropped earnings yesterday, but I'm still a trendsetter. Iron Condors is the next level. This kid's a clown preaching a year about GME, now talking AMC. Nah, it's CRO. How the fuck do you know? Laughing at myself. No word on paying down debt, and only idea is throw money out the window. Shit is all. Yeah, no, I mean, AMC, I don't know. I don't see it. I'll admit I'm wrong. If they start succeeding, driving profits, buying back stock, converting EAP, and this and that, I'll admit I'm wrong. I have no problem with it. But I just think Adam Aaron's slimy. He sells his shares and he's literally just begging for capital from his shareholders because what are they going to take on debt at a 12% interest rate plus? So I don't know. How do you know people are buying GME? LOL. I see just lots of people accumulating shares and just consistently talking about it. I don't see the retail base in any other stock that I do with GME. But of course, even without that, I think it is what it is. What's bound to play out is bound to play out over time. So I'm not solely basing like being in GameStop off the fact tons of people are buying in it. I think that's absolutely bullish that tons of people like the stock and are consistently following it and have a long-term perspective on it and are mostly not trading. But I don't think it's a sole purpose for like investment reason. But let's see, DRS is proof they're buying GME. Yeah, I think DRS is going to continue to cause problems, and it's going to continue to be interesting to see how it's reported, and it's going to continue to make the stock less liquid, all these different things. News don't mean shit, lol. Zero, I 100% agree with you. The news is all baloney. And I was saying earlier, I think it really is just designed to constantly pin people against each other. But having said all that, I really do have to go. Damn, there's 23 people in here. I don't want to dip right now, but I really have to, guys. I have to. So, again, I appreciate all you guys hopping on just for this open discussion. Like I said before, I'm just going to keep getting better. I'm keep streaming. Let the haters come in. Let the people come in. I appreciate you all. Have a great night.